Hello. Let's see if I did it. All right. I think I'm unmuted. Looks like we're getting audio. I think everything is working. All right. Hello. Welcome to Tuesday live stream, office hours. If you have any questions, feel free to put them in the chat. Or you can email them to kelly@pecantrio.com or email them to me directly at tracy@pecantrio.com. Just let me know that you did that so I check my email during the live stream. That is the one rule that we have with emailing me directly or chatting me is I have to know to check it. Otherwise, I will blow through this entire live stream without looking at anything. So, let's see. Double checking things. So we have a new background. I moved my office. So still getting things set up, but I got lights and we got the stuff on the screen here. So it should be pretty much the same for y'all. Also, in related news, somewhat related news, we have a video up on the actual channel, like a non-live stream video was actually posted. So it'd been probably a year since I'd posted a regular video on the channel. So we have a new promo video is what I'm calling it, where we're covering, I just do a quick, here's what we do, because I hadn't done one of those in a long time. So, you know, it felt nice to get back into that swing of things. So hopefully I'll be doing some more of those as things are getting a little more of a rhythm here. You know, things are growing and busy, of course. Like, I don't know any time in my life where I've not been busy, but that's just me as a person, I guess. But yeah, so hopefully y'all saw that and enjoyed it. Let's see. I, once again, do not have much of a plan for this live stream. So if you happen to be one of the 9 people watching right now, we have a little counter up. Let's see if I can point. Oh, no, it's this way. There we go. There's the point. There's the counter of how many people are watching live. But I also realize it's the middle of the day on a weekday, and a lot of y'all are going to catch this on the replay. So hello and welcome. So if you have questions, I don't have any that I was going to start with. I do have common questions I was going to hit, but I don't have any like direct questions. So now's your chance if you have any. Again, you can email them or put them in the chat. I normally have I'm normally a little more prepared than today, but I was making sure all of this stuff was all set up since this is the first time in this location. Luckily, my new desk is one of those that goes up and down and it has wheels. And so I could just like wheel it into here. And so you don't know this, but you didn't change any. You were all still the same setup. Okay, yeah, Fred. So, yeah, we saw your email about the estimator. You know, I was going to pull that up once again once I collect myself. Let me do that real quick. And also, hi, Sam. This is one I can hit while I'm pulling up the other one. So I'll go ahead and let me hit search on Fred's real quick. My email. Okay. Oh, I completely missed this one. Thank you for sending it. Okay. I'll hit that after Sam's. So, do you know the difference between a PV10 valuation and a DCF analysis of a company? So first we'll cover just real quick what those terms mean. So a PV10 valuation is a present value discounted at 10%. So PV10. And then 10% discount is roughly like saying that you expect a 10% return on your money. So the equivalent of if I could put this money elsewhere over time, like what would be the equivalent of if I got a 10% return. So that's a pretty common, I mean, it's the number one, I would call it in our industry, number one benchmark is your PV10. And it's thrown around as everybody knows what it means. So PV10 is, just think of it as if I got all the money I'm going to get from this company now versus in the future, what it's worth now. And DCF is discounted cash flow. So I would almost say it's like a rectangle square thing where one is a subset of the other, if like just going off of that information. If someone said they have a PV10 valuation and someone else said they have a DCF valuation or analysis, I guess is using that exact terminology, I would expect a DCF analysis to be like a report with the full support for that cash flow, and then it discounted at a variety of different rates. So usually PV 0, PV 8, 10, 12, 14, 20, 30, 40, something like that, where you can see a bunch of different discount rates, while a PV10 valuation could just be a paragraph, a number, like a one table in that report. Or they might be using some rule of thumb or multiplier to get to an equivalent PV10 valuation. That would be my high level answer with just that context on what those two mean. So feel free to add any additional questions on that and I can follow up, but yeah. Okay. And then I'll also hit this one real quick. So Edwin, hello, welcome. I've been closely working with mineral buyers and I want to be a bit more savvy. What kind of pointers would you have? Okay, very open-ended question for a Tuesday. Let's see, we got working with mineral buyers, and I want to be a bit more savvy. So when you say you're working with mineral buyers, are you selling assets? Are you buying assets with the mineral buyers? What side of the table are you acting on is what I would first ask. And then also, what is your background? Because yeah, I guess that would guide how I'd answer that question. I mean, learning more obviously is the first answer, like very generic answer. So you're already on the right track. Yes. Let's say buying assets with the buyers. Yes. Okay. So my high level answer to this, and you say you've mainly been in production. Okay. So for those not in the industry, if someone says they're in production, and correct me if you're interpreting this different, or you mean this differently. If someone says they're in production, that means that they're associated with the production of existing wells. So things that are, maybe you're working in the field, maybe you're like on the independent operator side, usually the operations of wells that are already drilled, and you're keeping them alive, keeping them producing, getting the stuff from the tanks to where someone will pay you for that oil and gas. So that's the production side. But then, okay, so going back to this pointers that I would have for a mineral buyer working with other mineral buyers. That okay, yeah, so correct, still a pumper, great. I think that's some of the more knowledgeable people when it comes to production, honestly. I think any production engineer worth their salt would agree with that. Let's see. So when it comes to being a bit more savvy, I think that a good starting point would be AAPL, the Association of Landmen, have a lot of resources online that have been helpful for me to get up to speed with the lingo specifically. So even if you know how to calculate things in terminology, the land side of the mineral buying space is such a huge component of it that the more that you can be familiar with that, the better. including with that is understanding how units are formed, pooling, how leases work, how the different depth clauses and all the different terms that can go into a lease, all the JIB statement, you know, all the JOA things that go into what you're being billed, what things are allowed. I mean, as a pumper, you know firsthand that there's a lot of things that you could be billed for, and whether or not your JOA allows for that if you're on the working interest side of things. Yeah, so I just getting real familiar with those terminologies. There's a I don't know if I have. Yeah, I don't have the book here yet. It's still in my other office, but there's a oil and gas in a nutshell. That's a law book. It's not very big. It's maybe this big. But that has been one of the more concise, like, if you want to know what a term means, covers all the U.S. One of the better legal books that I've picked up. So I think that that's a good one. Also looking into the backgrounds of the people that you're working with, especially if they're not someone that you're, long-term buddies with or something. Because there's a lot of people who they have, 6 months more experience in the industry than you do, and they're, talk a big game. You were recommended that book and haven't found it near you. Yeah, I found it on Amazon. I'll put a link to where I got mine on, I don't want to try to find it right now, but I'll put it in a comment afterwards where I got mine. But yeah, getting real familiar with what the different types of backgrounds of people can be, what they mean, who you're working with really does matter. Always, I've found it that if you're working with someone who doesn't want to tell you a lot of information because they think that gives them the upper hand, that's usually at least a yellow flag, if not a red flag. That's kind of it's a tactic when it comes to buying and having the upper hand, but I just see it used more with people who don't know what they're doing, more than people who are actually using a good strategy. And then I think the last thing I'd say would be to steer clear of any deals that you don't fully understand, because that's the other way that people get in trouble is someone will get crafty with the terms. They'll get crafty with how things are arranged, or things will be abnormal versus what's standard. And they'll convince everyone it's a great deal. They'll have so many great stories as to why. But first of all, if you don't understand it, then there's a good chance that you don't know what you're getting into. But also, if you don't understand it, there's a good chance there's a reason you don't understand it. Because it's just a bad idea. There's a reason that it's not done that way. And so I've seen, especially having this YouTube channel, I've seen, I get a lot of random things thrown my way, like, hey, I invested in this, or hey, I'm looking at investing in this. What do you think? And that's usually the thing that I see people getting in trouble with is you'll have some creative landman, usually, I'm just going to say it's usually a landman. But that said, a landman could be a lot of different things. There are registered landman, there's certified landman, and then there's I think 3 different levels of landman, and then there's people who just call themselves, I do land, so I'm a landman. It's like realtor. There's people who are licensed, and then there's people who buy and sell houses, and there's a wide variety of those. So that said, it's usually some type of land person who's like, oh, I have this great thing, this great offer once in a lifetime, and here's this contract, and I'll explain it to you because it's this simple things, standard terms, but it's really not. And then they'll get over their heads in something, and that's kind of what I end up seeing. I will also, I know that I said that was the last thing, but I do see some people who are on the operations, pumper field side of things, sometimes get in trouble by getting too focused on a certain individual well, because there's pros and cons to that. And on the plus side, you can really understand that well if you're investing in it and you're a part of solving how to make that well produce more. I think that's a great strategy. But what's often underappreciated is the risk involved in investing in a single well or a single section. So just make sure you understand fully the risk that you're investing. Like, you're basically putting all your investment in one stock, if you want to think of it from an investment terminology. Would you have the same comfort putting that amount of money in a single company that you don't control? And if you're investing in non-op or minerals, you're not controlling it. You're just following along with whatever the operator's doing. So think of it in the same, every section is a company. You could think of it like that, where however much you have invested in one section is how much you would be comfortable investing in one company. So that's going to be different for every person. So is this fun money for you? Is this a lot of money? Is this your life savings? Like, that really depends on what you're doing with it. So, okay. Hopefully that helps. I can ramble a lot longer, but I'm trying to be a little more concise with my answers. So hopefully that helped. Okay. Fred, let me look at your question here. I'm going to copy this into a PowerPoint and do that whole share thing. Give me 1 second. Here, I'll give y'all some nice music while I put this into a quick PowerPoint. I didn't have it open. I guess I should. Okay, I'll make the funny music go away for this. I will point out. We were really close to the flooding that happened in Central Texas. We were not affected, thank goodness. But I think we all are in agreement how devastating all of that is. And yes, it is as devastating as the news stories make it sound. So if there's any efforts that you're looking into assisting with that, like supporting it from a donation standpoint, it's very local to us. So hopefully everyone watching this was unaffected, or prayers with you if you were, or if your loved ones or friends and family. But anyway, I just thought I'd mention that since we're like 5 to 10 miles away from where all that happened. So okay, on to happier things now. You know what? We'll get out of that low with this. Okay. That really shows how engineer / corporately trained I am, that my comfort place is PowerPoint. We're working with a designer for our website. If you haven't checked out our website, it looks really good. I'm really happy with it. But we asked him to redesign some of our slides, and he's like, "Oh, I don't even have PowerPoint." And it's like, "What is that like?" I don't even understand what that's like. Okay. All right. So let's see if I can do this seamlessly. Hi, Mary. How are you? You are just on time. You are not late at all. I appreciate everyone watching. I should also mention, if you hit the like button on this stream, that does help us. Helps it get out to more people, helps YouTube know that people like watching it. I don't know how y'all found this, but we appreciate it. Appreciate being here. I surprisingly really I say this surprisingly for me because I'm an introvert, that I surprisingly really like this. I don't fully know why. Ooh, that is not centered at all. Let's see what I can do. How does this even work? Okay. I think that's good. Okay. So Fred, your question is, one of the questions I had about your estimating system is that if we are a mineral or royalty interest owner and I don't have any say or pay from the lease, how does that affect the estimating system's calculation? We do own all the way down, so no limitation on that. Note, thanks for addressing that in your last session. You're welcome. What can I input to make sure the valuation is more accurate, or is that not even an issue? We have various family members who are interested in running their own analysis on their mineral interests. So let me make sure that I'm summarizing this correctly. You're wondering if don't have any say or pay from the lease. How does that? So it's a non-producing property or a producing property? You don't have any say or pay. So you're a non-executive mineral owner then, where you don't get like a lease bonus. You don't get to decide who you're leasing to. Is that what you mean? And if you're not here, that's fine. We can guess if you've gone on to better things. I'll answer both ways. So let me pull up our actual tool, and we will go into a test account. Okay, we'll do this one. Okay, now here's the real test. Can I share my screen without it screwing up too much? Well, that's not too bad. Okay, let's see here. Y'all get to see a little bit of how the sausage is made in emails and stuff, but we'll do this. Doop. Okay, and then Fred, you said, move my chat where I can see it better. Producing, and we don't receive any bonuses, etc. Okay, so you're receiving, you're a mineral owner, own all depths. It's of a producing property that you don't receive bonuses and you don't have any control over the lease. So that's what I would call a non-executive mineral owner. Sometimes it's just considered a royalty interest. The deed might say you have a 0.03% royalty, or whatever it is that's being deeded. So how I would do that is, right now I'm logged in as can I make this bigger? There we go. It's a little bigger. Okay. Right now I'm logged into my dummy account that does not have our new pecan portfolio. So this is all stuff that if you're watching this, you can follow along for free. If I create a tract and I do, let's say that all you have then is maybe you're getting paid on a well and you get a monthly pay statement, revenue statement from whoever the operator is. One thing you can do, so I guess I will show right now, it used to be you had to say what state you wanted to start in. Now you can just scroll around and it will see that you've switched states. That's kind of cool, huh? Good job, Jason. Jason and JD, our dev team / partners / brother and sister-in-law. So let's say that you're and then we'll call it DJ Basin. So here's the Denver Julesburg Basin, and you have this little pocket. It's a pretty active pocket. It's so we have the high, mid, low value per acre here. It goes from not much to all of a sudden as hot as it goes in the country, pretty much. So let's say that you're getting paid on a well, and most pay statements have like the county and the state. And so we can say, do a well search. You can search for a well by name, or if you're in a certain area, Once you zoom in enough, it will show the wells that are there. And it's loading. Here's a little loading sign up here. Also, if you zoom in far enough, eventually the quarter lines will show up once it gets zoomed in. Actually, they are there. It's just very hard to see. Let me turn this off. There we go. Now you can see them. See these kind of gray lines going across? Those are the quarter lines. So if you see something that says like the northeast quarter of the northeast quarter, then you would say, okay, this is breaking it up into quarters. So I'm talking about this northeast quarter, and then I'm talking about the northeast quarter of that, for example. But let's say that we're looking at this Rinkner Vance well. We want to wait. I did the wrong one. Search this area. W. Let's see if I can just search Vance. Last time I tried this on live, it didn't work. So, oh look, it worked. Okay, I'm not surprised at all. Of course it worked. Why wouldn't it work? So then you can hover over and see a little more details about that well. Make sure it's the right one. Make sure that you're actually getting paid from Kerr-McGee, for example. But if you want to, we are about to combine these two features together. So it's not. This is just today's version. Who knows? By the end of the week, it'll probably be different. That's just how quickly our stuff happens. But we're just walking through. Let's say you're getting paid on this Rinkner Vance well. And so you find the API 14, which is the unique identifier that each state applies to wells. The first two numbers is usually the state code. For Colorado, it starts with a 0, so it's just the first one number is the state code. The next 3 is the county code, and the next 5 is the wells code, and then any of the numbers at the end, the 4 numbers at the end, is the completion and the formation, usually. Every state kind of has their own way of doing those last 4 numbers, but the first 10 are usually pretty standard. So if you don't know how to get to the API 14, that's the hard part, is finding the API sometimes, because the statements usually just have the name, and sometimes there's very similarly named wells. And so making sure you have the right one, like the one that is active, operated by Kerr-McGee, and in the right block and section that you're talking about, like that's usually the hard part. So we're going to go ahead and copy this, and we're going to go over to this add well API thing. So I'm going to put that API number here. Again, this will probably be combined into one step in the near future. And then here, if you're NPRI owner, then you probably only know either, you might know what your net acres equivalent is, but I've often found that people just say, hey, I get this check in that case. So let's say that you're getting a 0.002 payment on your statement. It says that, you know, here's the check amount. Here's all the details that are going into that check. Here's the oil, gross oil, net oil, owner's decimal. Each person calls it something different. This is the owner's decimal in this well is what we're looking for. So I can say get geom, and that will, based on the size of the unit that we think that well has interest in, we're going to estimate that you have an equivalent of 8.3 net acres. And that isn't the reason that's we're doing that, we're telling you that, is because when we build the estimate in the future, we're going to show you this is based on 8.3 net acres, and you might not know where that comes from, but it's really because you're getting paid that much in the well, and that's how many, that's the equivalent acres that you would have to own, how many shares of that company, if that well was a company, you'd have to own in order to have that much pay coming your way. So I'll go ahead and say, okay, we're gonna outline the well that the unit, here it is. If you need to edit that, you can hit edit geometry, and then it won't accidentally click off of that. But if you know that our unit is wrong and it doesn't include this little corner up here, for example, you can edit these things by moving these around. And I'm just going into this because we don't have many demos. I know this is outside of what you're necessarily asking, but I have time, so I'm going to say it. So you can edit this and then create the tract. Because I edited it didn't keep some of the default stuff. If I had just said get geometry, it's a good, okay. If I just said get the geometry and then didn't edit it, it would keep that estimated acres. That's way too many decimals for what our purpose is today, but when we're backing into the net acreage from your pay decimal, the reason that we're doing it this way is because this is our way of getting everything apples to apples. It's kind of like how if you're looking at houses, everything is put in dollar per square foot, because it helps you helps you see the differences between house A and house B if they're different square footages. Oh, this house is worth more per square foot than this house. So our model kind of builds everything up from the dollar per net royalty acre basis and then does all the conversions from there. So, we're working on visualization, like how best to display that, because that's what's happening in the background. But this is step one, is helping you equate what that is equal to. And it autofills in the well. And so that's all you need to do if you have a pay decimal on a well and you don't know what it's leased at because you don't have access to the lease or you lost the lease. This 12.5% lease royalty rate, or 0.125 if you're looking at decimal form. We have a little note here, but I'll say it also. There's net acres, which is like the flat out we'll go back to the shares analogy. How many shares of stock do you own of the whole company if the whole company is the whole well? Like, if every dollar that gets produced from that well, what is your net share of that? And it's net acres because there's a certain amount of acreage that's associated with that well. So a net royalty acre addresses the fact that it's really common not to know the lease royalty rate for a lease. A lot of times you'll get offers in the mail if you're in an area that's active and hot that will say, we think you own 5 net royalty acres, and they'll call it net royalty acres. And you do need to check that their definition of a net royalty acre is the same as what I'm saying here, because I'm just saying the most common and also what we've adopted. But like this industry likes to do, there's different definitions of things. And so double check that they're using the same definition. But typically a lease royalty rate that is 12.5%, it used to be industry standard. In around early 2000s, late 90s, really is when oil prices started recovering from the 90s oil prices. So early 2000s, really. People started getting creative with lease royalty rates, and it started straying from the common 1/8 royalty, which was standard for like 100 years prior. And so a lot of older leases will say the standard 1/8 royalty or the standard 1/8 royalty. And that's a whole other bucket of worms, can of worms, regarding fixed and floating lease royalties that can happen. When someone said, like, the 2-second summary of that is, if a lease said the common or the standard lease royalty of 1/8, were they saying, whatever it's leased at, such as 1/8, and so the lease changes, which is floating, or were they saying regardless of what it's leased at, 1/8? And that's been an interesting legal battle. But usually we don't. If you're only looking at someone's pay stub, which is a lot of times what all they have, and Edwin, this is a good tip for you here, right? This is a lot of times all your seller has is a pay stub. If you're lucky. Sometimes they just have a 1099 and a bank statement showing, oh yeah, look, it was deposited. So it's like, great, what was deposited? Yo, Manor 2005 says yo. He gets the shout out, husband. But back to this. So the in the case where you just have the well and the decimal that they're being paid, you don't know anything about the lease. And so the industry created this thing called the net royalty acre, which takes all the same numbers and adjusts them to as if it were leased at 12.5%. Because let's say that we're wrong and it's leased at 25% royalty. But you're still getting paid that same amount. These two numbers, when they are combined, let's see if this works. Yes, it still works. The net acres, when combined with the lease royalty, you combine those to get at least a net royalty acre. And so any acre leased at 12.5% equals one net royalty acre. So if I say 8.31 net acres leased at 12.5%, that's 8.3 net royalty acres also. So if you're getting paid as if you had 8.31 acres leased at 12.5%, that's the same as if same amount that you would get paid if we were to double this lease royalty rate. So if the lease was actually a 25% royalty, and I know I'm just like saying a lot of numbers. Hopefully I'm not like going too off the deep end with numbers, but you know, that's what this Q&A is for. You can ask more questions. Let's say it's double this. So right, double this is double of 12.5% is 25%, right? So if you were getting paid twice as much as if you had a lease royalty rate of 12.5%, so and just to reiterate, that means that for every dollar the well produces in revenue, you're getting, instead of 12.5 cents, you'd be getting 25 cents. So if you're getting paid double, then we would just estimate this to be half as much net acres. Because that's what the numbers would need to do in order to balance to that pay decimal. So if you knew that you had a 22.5% royalty, for example, you could go in and you can do the math to figure out, we're about to add a calculator here to help you with that math, but you could go in and say, it's actually a 22% lease, and that equates to like 6 or whatever the equivalent net acres is. You'd have to change both if you want to change one, or else you're just gonna increase the number, like your pay decimal wouldn't match anymore. But that's how things kind of balance. So yeah, if you don't know the lease royalty rate, we do recommend putting in 12.5%, and then this would be a net royalty acre, whether or not it actually was leased, like whatever the lease actually was, it's equivalent to a lease royalty acre. Fred, you say, that was a thing I wasn't sure about, the lease royalty rate and what to put in there. I do know the net royalty acres or net mineral acres. Yeah, okay. So if you're ever putting in net royalty acres, just put in 12.5%. If you're putting net mineral acres, you put what it's actually leased at, which may or may not be 12.5%. So that is the high level summary. Yep, great. So good info. Thank you. You're welcome. Always happy to share how to use our tool. Just I guess to follow through, we'll go ahead and create this. So it just created that tract. Then you can click on it to get to it, and it's currently calculating based on those inputs that we just did, what the estimate is. This free estimate, I'll just go ahead and continue down this path. The free estimate is so wide because it's only using that those 5 different bands of color to show you there's a wide range on those bands of color. So it's just to give you is this even worth spending $50 on, let alone like anything, or is this worth spending any time on, let alone anything? So in our pecan portfolio, you'd be able to see what well list we say is associated with this property, what the status is of those wells, what interest we think that you should have based on the amount of acreage that you, this 8.3 net acres. It has a more fine-tuned scope. It has an estimated well revenue. It has our new insights, which it's similar to if you went to Bloomberg and looked up a stock, like, is this a high or a low stock, right? Is it going up or down? And it also has alerts that we're rolling out that will help you know if something drastically changes in value, if a new well comes online, if an operator changes, those type of things. So that's our pecan portfolio, and you can track up to 150 of these in our core level subscription. But in our light, I think we called it light. I think if I click here, it will display it. Yeah, okay. We have our light pricing, which is only $25 a month, where you can get all that information for up to 3 tracks. So that is our new subscription product that we're rolling out. We're getting more information daily on the website about that. And if you're interested, we do have a form to fill out that you just fill it out, and we'll get in contact with you and get you access to it. I should also say that the first 2 tiers, we have a month-to-month option if you just want to test it out. And then the other ones are billed annually. My mother-in-law is here. Bye, mother-in-law. Yeah, so that's our sponsored segment for the Q&A today was my own sponsored segment. Oh, I don't actually think I said it. I'm Tracy Lenz. I am a petroleum engineer. I'm the owner of Pecan Tree. We are a appraisal firm, and we do both high-end appraisals. We have our DIY automated tool, and then we also do independent consulting. So on our brand new website, we have all of that laid out a little more than we used to. Slowly getting things pulled together. Okay. Mary says, gonna have to learn how to use your tools for our wells. Yeah, happy to help you set up things as needed. We have a setup service also. I know that, it's like taxes. Whenever I'm doing my taxes, I feel like TurboTax is putting things at the absolute lowest level possible, like kindergartner level of put this number here, match it to this number here, A to A. And I still have no idea sometimes like what I'm doing. So I get it. I really do get it. That it's not intuitive. It's not normal to know how to do this. And we are here to try to help as much as possible. My goal is to eventually get it where it's at least as easy as TurboTax. Like, I never expect to get it to a point where everyone knows how to do everything, but, at least making it more approachable. This industry is so non-approachable that I do want to make it as approachable as possible. Okay. Was there any, I feel like there was one more. Oh, we have a question. Okay, Sam, got another follow-up question. Do you recommend investing in a company, buying shares, based on the PV10 or doing my own DCF? Well, that depends on your background. If you're familiar with how to do, like if you're a finance person with your own model, I mean, I never think it's a bad thing to double check numbers. Buying shares based on PV10, I think is also a little, you really have to know what you're doing there too. PV10 is used as the benchmark in our industry for what a producing property goes for. I mean, that's kind of the standard number for reserves for publicly traded companies, which sounds like what you're talking about. But it's not. So, okay, I say this as someone who did who did reserves for a public company. I was like the reserves person, who gave the number, like the PB10 number, to our investor relations team, and it went in our 10K and it went in our annual filings. Like, I say this as a person who created that number. It is not necessarily representative of the value of that company. It is representative of the apples to apples standard way to calculate the reserve's value as of a certain date. And I know that's not super helpful, but knowing how to take that number and manipulate it and interpret it and know what they're saying and putting it into okay, what does that mean for the value of this company? Two different skills. So like if you know how to do that, I mean, I'm always for doing your own work, checking numbers, because I've seen some wild things when it comes to investor relations numbers versus what's actually happening behind the scenes. So not at companies I've worked for, but just, it's always like after like the ship goes down, like you see what was in all the closets. But or like stories that I hear from the auditors, that we would have come through our company. I trust nothing these days. So maybe that's why I created a company that specifically meant to, provide all this information out there for people to double check things and do their own work. But if you know how to do a DCF, then I'll obviously do it. I think it's good practice, but it's also really easy to go astray in your numbers. So maybe work with someone who knows how to do it and check against their numbers. It's kind of fun doing these live streams because you could have any background in the world, right? You could be, Sam could be the pseudonym for, what was it? What's the one that you always like? Mr. Wonderful, Mr. Whatever. And I don't watch enough TV to know all the popular names. I'm sure somebody watching this knows who I'm talking about. The balding guy on the one startup show. I should know the name of the startup show, shouldn't I? But yeah, you could have any background in the world, is what I'm saying. But I'm assuming you could have any background in the world when I answer this question. So, okay. What else we got? Oh, let me check all my messages and stuff. I haven't checked messages in a while. Let's see. Okay, not seeing questions from Kelly. Double check my email. I've gotten in trouble before for missing questions as they came in, so I'm trying not to get in trouble this time. Thank you, Mary, for saying that, making it approachable and understandable, so much to learn. Yeah, and hopefully, I mean, I always think that the more you know, the more you can make the right decision, so always lean that direction. But also, this is not the most fun topic ever. So, I mean, for me, it is. That's different. I'm like the weird tax guy. Okay, I don't think I have any questions coming through on email either. So, I'll put a last call for questions, and I don't think I have any news stories that I wanted to cover this time. Last time I checked commodity prices, there wasn't a lot of movement there either. Let's see. I'll go ahead and show this. There we go. I knew you would know it. Alice Hooten. Mr. Wonderful. Kevin O'Leary. Yeah. Sam could be a cover for Kevin O'Leary. We never know. Okay. Let's see. Okay, I feel like if I try to show, there we go. I feel like if I try to show the price deck, I'm just gonna accidentally show other stuff on my desktop, and I don't want to accidentally do that. So, right now it's looking like prices are running around. Oil is as of the first of the month, 65 in that same ballpark. I wonder what let's look at crude oil prices today. Okay, so I'll go ahead and show this. I'm just filling time for I didn't, did you ever get info on that Kimball stuff? No, I didn't. Sorry. I did not. Um I now I lost what I was doing. It's okay. Oh no. I just lost my screen. This might be the end of the live stream. I lost my monitor. I think I did too much on my computer. That's okay. We'll go ahead and just chit chat or call it. But yeah, it looks like crude's at $66, Brent crude's at 68, natural gas is at 350. So natural gas is having a good run. Oil is up from the first. Oh yeah, I keep losing my screen every time I move my mouse. So looks like we're just. Hopefully, I'm not losing the stream too much, but we'll go ahead and call it. All right. I hope y'all have a wonderful week. Next week we have a conference that we have Whitney coming in town for. So maybe I can get Whitney on a live stream. You heard it now. Oh, okay, Sam, you fit one in. Here we go. Oh no, I moved my mouse. Lost it again. Let's see, it's coming back. Here we go. As far as the intrinsic value of the company, what other valuation points should I look at other than the value of the proven developed reserves? I would look at what basins they're in. What their entry point was in that basin. Like, did they get in at a high point or a low point? I really hope I'm not losing my video whenever my monitor goes out. I think it's just my monitor that's going in and out. Ryan says, yes, make Whitney be on stream. Haha, yes, we will. I think we'll do it. We will do it. Yeah, I would look at what point they entered that basin, like what did they purchase the acreage for, because a lot of times that value is like hidden in the numbers, the purchase price. For whatever reason, with how the books are done, the books, the purchase price of things tends to get separated from the future value of the reserves. But it does affect the bottom line for sure. So, what you bought your investment house for really depends on if it's a good investment, right? So, yeah, look to see when they got into that basin, what basins they're in. Are they risked on any particular area? Like, are they, at risk of a pipeline going down, at risk of OPEC flooding the market, at risk of natural gas prices plummeting for whatever reason, or, the opposite, at risk of natural gas prices shooting through the roof and them really benefiting. How hedged they are. Hedging can really make a big difference on value, and a lot of times that's separate from the reserves number. I think I'm not going to speak for everyone, but most of the time when I see proved developed reserves, it's before hedging is included. So look at their hedging profile. And I think that I guess, I always think that the experience of the people at the helm does matter, but I also think that people are really good at making them sound like they're better than they are on bios. So I don't know how you'd know that without actually knowing the person. So, um, yeah, I would look at those things. But good luck with it. Good luck with investing. And honestly, I would just assume everyone has skeletons in their closets and diversify, right? That's what I would do. Okay, well, I think we will call it then. It's 3 minutes to 1 o'clock, so that's actually pretty good on time. So thank you for joining us. Thank you, everyone, for your questions today. And sounds like we're going to try for Whitney on stream with me, sitting next to me, probably hopefully around here next week. We're going to make it happen. We'll make it happen. All right. Thanks, y'all, and we will see you around. Bye.